Oil just dropped 24% in a single session. That is one of the largest single-day crude oil price collapses in modern market history. And it happened because the geopolitical equation in the Middle East just shifted in a way that markets had not fully priced in. Donald Trump posted this morning that the United States will work closely with Iran following what he described as a productive shift, that there will be no uranium enrichment, and that many of the 15 points from Iran's proposal have already been agreed to. Pete Hegseth addressed the armed forces directly, telling them the mission was accomplished and to stay vigilant. And the S&P 500 is set to open above 6,800. Tonight we are going to break down exactly what happened, why oil's collapse matters for crypto and XRP specifically, what the connection between geopolitical de-escalation and digital asset prices actually looks like in the data, what comes next for both markets and the ceasefire framework, and why the Clarity Act timeline just got a significant tailwind from something most crypto channels are not talking about at all. There is a section in this video on the specific mechanism connecting oil prices to crypto capital flows, data from previous de-escalation cycles, that I want you to stay for, because it is the piece that tells you whether what is happening today is a one-day sugar rush or the beginning of a sustained macro tailwind. Stay for that. Before we go further, this is not financial advice. Nothing in this video is a recommendation to buy, sell, or hold any asset. This is educational analysis based on publicly available market data, geopolitical reporting, and on-chain metrics. Always do your own research and consult qualified professionals before making any financial decisions. If this is the kind of channel that connects the geopolitical picture to the crypto market through actual data rather than just headlines, hit the like button right now before we start. Subscribe with the bell on, because the next 48 hours in both oil markets and the ceasefire framework are live and developing, and the breakdown drops here as it moves. Let's go. Start with what actually happened, because the sequence of events today matters for understanding both the market reaction and what comes next. This morning, Trump posted on Truth Social that the United States has determined Iran has gone through what amounts to a productive regime change, that there will be no uranium enrichment going forward, and that America will work with Iran on removing nuclear material from the sites targeted in the campaign. The post also noted that many of the 15 points from Iran's ceasefire proposal have already been agreed to, and that any country continuing to supply weapons to Iran faces immediate tariffs. That last clause, tariffs on Iran's arms suppliers, is the enforcement mechanism that gives the whole framework teeth without requiring additional military action. Russia, China, and North Korea are the primary potential weapon suppliers. None of them want to absorb tariff escalation on top of the existing trade pressure already in play. The economic deterrent is real and it is immediate. Simultaneously, Defense Secretary Hegseth addressed American armed forces directly with language of mission accomplishment and gratitude. That kind of public messaging from a sitting defense secretary is not issued casually. It signals that the administration has made an internal decision that this chapter of the conflict is closing. Iran fired 17 ballistic missiles and 35 drones in what analysts are reading as a final demonstration of capability. Not an escalation, but a face-saving signal that departure from the conflict was on their terms, as well as Washington's. Markets read all of this in real time. Oil opened the session and collapsed 24% before noon. The S&P reacted immediately to the upside, and the geopolitical risk premium that had been baked into every asset class since February 28th began to unwind simultaneously across crude, equities, and crypto. Now let me give you the oil section, the mechanism connecting oil prices to crypto capital flows, because this is the piece that tells you whether today's move is durable or transient. At the peak of the Iran conflict, Brent crude was trading at $103 per barrel. Pre-conflict, it was in the mid-70s. That $28 per barrel premium represented pure geopolitical risk. Capital parked in energy commodities as a hedge against Hormuz disruption, regional escalation, and supply chain breakdown. When geopolitical risk premiums collapse, as they did today with that 24% single session drop, that capital does not disappear. It rotates. The question is where it goes. The historical pattern from previous geopolitical de-escalation cycles, the 2020 US-Iran tensions after the Soleimani strike, the 2022 Russia-Ukraine early ceasefire negotiations, the 2023 Israeli-Hamas initial ceasefire discussions, is consistent. Risk capital flows first into equities, then into higher risk assets including crypto, in a sequence that typically plays out over 2 to 4 weeks following the initial de-escalation signal. This is not guaranteed. It is a pattern. And the pattern is driven by a specific mechanism, institutional portfolios that had allocated to energy and commodities, as geopolitical hedges need to redeploy capital when that hedge thesis no longer applies. The pool of capital looking for a home is not small. The geopolitical risk premium at $28 per barrel times global daily oil consumption of approximately 100 million barrels per day represents enormous economic value that has been locked in elevated energy costs. When oil returns to $75, that value is released back into the broader economy and financial markets, gradually, but in volumes that move asset prices. For XRP specifically, oil at $75 versus oil at $103 means lower inflation pressure, which means the Federal Reserve's path toward rate normalization becomes clearer, which means the macro headwind that has been compressing risk asset valuations for months weakens. Lower energy prices reduce the input cost pressure on every business, which supports corporate earnings, which supports equity valuations, which creates the rising tide that historically lifts crypto as well. Comment oil rotation below if you understand this mechanism, that what happens in energy markets today creates the capital flow conditions in crypto markets 2 to 4 weeks from now. Because I want to know how many people watching this channel are connecting the geopolitical picture to the crypto opportunity in real time. Here is the Clarity Act tailwind that almost nobody in crypto is talking about today, and it is arguably the most important second-order effect of what happened this morning. The single biggest reason the Clarity Act was slipping toward a July timeline or potentially missing 2026 entirely was not opposition to the bill itself. It was floor time competition. The Senate calendar was dominated by three things: the Iran conflict resolution, tariff negotiation frameworks, and the budget reconciliation process. Iran was sucking up oxygen in every committee hearing, every floor debate, every leadership meeting. A ceasefire framework being agreed to, even a fragile one, does not clear the calendar overnight, but it meaningfully reduces the intensity of the geopolitical crisis management that was consuming the Senate's legislative bandwidth. Clarity Act sponsors and supporters in the Senate have been explicit about the floor time challenge. With the Iran situation moving toward resolution rather than escalation, the probability that the May 21st Memorial Day window opens for Clarity Act floor consideration improves materially. This does not make Clarity Act passage certain before the midterms, but the de-escalation in the Middle East removes the most significant external event that was competing for Senate attention during the exact legislative window the bill needs. And for XRP, the combination of the macro tailwind from oil normalization and the legislative tailwind from reduced geopolitical crisis pressure is the most favorable environmental combination the Clarity Act has had since it entered the Senate Banking Committee markup process. Now let me give you the XRP market structure picture in the context of what happened today, because understanding the technical setup tells you how to think about this macro tailwind rationally rather than reactively. XRP entered today's session in the consolidation range between 1.27 and 1.65 that has been its structure for weeks. The immediate technical levels that matter for the next move are 1.65 resistance, which needs to break and hold on a closing basis to confirm a bullish phase shift, and 233 as the first meaningful Fibonacci target on the confirmed breakout. What the macro events today, oil collapse, S&P positive open, geopolitical de-escalation signal, due to the XRP technical picture, is shift the balance of probability in the consolidation. In a neutral or negative macro environment, consolidations tend to resolve to the downside because the absence of positive catalyst means gravity wins. In a macro environment where oil is dropping 24%, equities are rallying, and geopolitical risk premium is unwinding simultaneously, consolidations in fundamentally strong assets tend to resolve to the upside because capital is looking for risk exposure, and XRP sits in a favorable regulatory and institutional position to receive those flows. This does not mean XRP is guaranteed to break out today or this week. The ceasefire framework is fragile. The 2-week clock is still running. Iran's final deal has not been signed. Any deterioration in the ceasefire conditions over the next 48 hours could reverse today's oil move, and with it the risk appetite that is currently supporting crypto prices. The honest framing is, the macro environment just shifted from headwind to potential tailwind, the technical structure is positioned for a breakout, and the Clarity Act legislative window just got marginally more favorable. Three factors moving in the same direction simultaneously is not a guarantee, but it is the setup that historically precedes meaningful directional moves in assets with genuine fundamental support. Here is the complete picture for today. Oil dropped 24% on ceasefire signals, the largest single session collapse in recent memory, and a release of the geopolitical risk premium that has been suppressing every risk asset since February. Trump's Truth Social post confirming direct engagement with Iran, no uranium enrichment, and many of the 15 points already agreed to is the most substantive diplomatic signal of this conflict to date. Hegseth's message to armed forces signals an internal administration decision that this conflict chapter is closing. The S&P is set to open above 6,800 as risk appetite returns broadly. The capital rotation from energy hedges toward risk assets, equities first, then crypto, historically plays out over 2 to 4 weeks following this type of de-escalation. For XRP specifically, oil normalization reduces inflation pressure, clears the macro headwind, and improves the Federal Reserve's policy path, all of which are tailwinds. The ceasefire resolves the primary Senate floor time competitor for the Clarity Act, marginally improving the May 21st window probability. And XRP's technical structure, consolidation between 127 and 165 with Fibonacci targets at 233 and 260 on confirmed breakout, is positioned to benefit from the macro shift. The honest caveat, the ceasefire is fragile, the final deal is not signed, and 48 hours in this environment can reverse everything. Stay informed, watch the technical levels, and size your positions for the risk that remains, not just the opportunity. If this gave you the complete picture, oil mechanism, capital rotation data, Clarity Act legislative tailwind, and the XRP technical setup in this new macro context, smash the like button. You stayed through the full analysis, including the oil rotation mechanism I told you was the piece that separates a one-day move from a sustained tailwind, and that tells me you are tracking this with the right level of depth. Share this with one XRP holder who saw the green today and is trying to understand whether to act on it or wait, because the framework we covered tells you exactly what to watch over the next 2 to 4 weeks. Subscribe and hit the bell because the ceasefire framework, the oil price trajectory, and the 1.65 resistance level are all live right now, and when any of them moves, the breakdown drops here immediately. Tell me in the comments, do you think this ceasefire holds and becomes a full deal, or does it break down again within 48 hours? And do you think 165 breaks on this macro momentum? I will see you in the next one.